Hello, my name is Mariah Starwood, and I am doing my accounting project for Accounting 202. And I decided to do homework or chapter 20, which is all about breaking even and revenue and stuff, just because I felt like it's interesting. And I pulled this problem up from the homework because I'm not creative to come up with one on my own. And the scenario for this is I made up the corporation. Major Investor Corporation is opening up a new office, and this is all of the information that was given. So the fixed monthly costs, rent, depreciation of office furniture, utilities, special telephones, online services, salaries, all totals to 21,000, and the variable costs, payments to a financial planner, advertising, postage and supplies, and usage fees, which all totals up to 30% of the revenue. So the first problem says to use the contribution margin ratio to compute the break-even revenue in dollars, and if the average trade leads to $750 in revenue, how many trades must be made to break even? So companies use the contribution margin ratio to compute the required sales in dollars, and that is fixed costs plus target profit divided by the contribution margin ratio. Margin ratio. And this equals the required sales in dollars. So before we do anything, we have to figure out what the contribution margin ratio is, and that is the contribution margin per trade divided by the average revenue per trade and this equals the ratio. So but before we can even do that, we need to figure out what the CM per trade is, which uses this formula. Average revenue per trade minus the revenue times the sum of percentages. And this would be the contribution per trade. So we're working a little bit backwards, but we have to figure this out to do the general. So we know that the average revenue per trade is $750 because it was given in the first problem. And we can minus this with 750 times the sum of all the percentages. So this would be the 9%, 11%, 4%, and 6% from the variable costs. And I did all the math beforehand, so I know what the answer is, and I know I'm doing it right. And so I know that this equals 525. So then we take this number and plug it into the CM ratio equation. So 525 per trade divided by the 750 average revenue per trade would equal 70%. And this right here is the CM ratio. And with this percentage, we plug it into the required sales in dollars equation. So the fixed costs, which is the 21,000, the total of the fixed costs that they gave us already, plus there's no target profit, so we'll just put 0 for that. And this would be divided by the CM ratio that we just found, the 70%. And I already did the math, so I know that the answer is $30,000. $30,000 would be required to break even. So 30,000. And with this number, we can do $30,000 divided by the 750, because that's how much it is per unit or per trade. So this equals 40 trades. So we would need to sell 40 in order to break even, because 40 gives us the 30,000. So that's the break even point. And let's see. So it's not too hard. You just have to know these formulas and you can find your answer easily. But let's say, I'm going to flip this over. All right. So let's say that they want us to earn maybe I guess I could leave it this way. They want to earn the target profit of $10,500. Because everybody, wants to make profit. People don't sell to make no money. So all we would need to do is plug it into the equation. So we have the equation, sum of fixed costs, and then we want to make sure that we add the target profit because we want to make sure that we get more than that. The average divided by the average revenue minus the total variable costs, which would equal the required number of sales. So this would be, so the sum of the fixed cost, which is the 21,000 plus 10,500 equals $31,500. And this would be divided by the average revenue, which is $750, minus the variable costs. And I found the variable costs by subtracting the average revenue minus the 525, the CM per trade, which equals $225, or 225, sorry. And the answer to this would be 60. So you would need to sell 60 units in order to make that profit of $10,500. And to get a number, so it would be $750 per unit times the 60 units, which would make you $45,000. So you would need to earn $45,000 in order to make the $10,500 profit. And for those of you who don't really know, I put it in graph form to help you guys understand maybe a little bit more. So this line is the fixed costs. We have the break-even point of 40 and I believe it's, $30,000. So 40 and 30. And then the monthly income earned or with the profit of 10,500 would be 60 sales, and that would take you to 45,000 right here. All right, I hope I helped, and thank you.